the U.S. Mint is bringing out their celebration coin on July 4th. And the gold coin, which is in the shape of the Liberty Bell, it's 1 ounce of gold, but they're charging $19,000 for it.
Right.
And like, what are they charging for the silver coin? Like $750?
Yeah, it's like a 13-to-1 ratio.
$750.
Yeah.
I don't know. Even this time I'm thinking, no, there's no way they can knock it down that far. That's impossible. The impossible happened in 30 hours.
I think you could see 20,000 on gold. And I've raised my long-term expectation on silver to maybe 1,000. So, still big moves in those, even though they'll correct during the bust. They will come out the other side with much higher highs.
Sharp corrections have shaken confidence across the precious metals sector, but history shows that some of the strongest rallies often begin when sentiment is at its weakest. Recent declines have created uncertainty, yet the long-term outlook remains remarkably constructive. Eric Sprott, one of the most influential investors in the precious metals industry, and David Hunter, a veteran market strategist known for his long-range macro forecasts, believe that current volatility should be viewed within the context of a much larger secular trend. Both point to mounting debt, currency debasement, and structural supply-demand imbalances as forces that continue to favor gold and silver over the long term. Gold and silver experienced an extraordinary run earlier in the year, with silver approaching previous targets near $125 and gold advancing strongly before entering a correction phase. Despite the pullback, confidence in higher prices remains intact. Forecasts were initially raised from $5,500 gold and $125 silver to $6,800 gold and $180 silver, and later increased again to $7,000 gold and $200 silver. Rather than signaling the end of the bull market, the recent decline is viewed as a temporary interruption within a broader upward trend. Market psychology often shifts dramatically near major turning points, and periods of fear can create the foundation for powerful reversals. As investors reassess inflation risks, monetary policy, and economic uncertainty, gold price today and silver price today may eventually be seen as attractive entry points within a much larger cycle. Now, we present the clips from their interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I raised, I had a target, I think, of 125 on silver and 5,500 on gold. Going into this year. I guess that was my numbers in my January letter, early in January. And then we had that big run from December through the end of January where silver went to 122. I had 125 target. And I looked, it was a parabolic run. It went from 50 to 122 in a big hurry. And gold had a nice run too. And I re-looked at it. I said, this is parabolic. Is this the end? And there was nothing I saw in any of my work that said this is it. So I raised my target from 125 on silver to 180. And I think I went to 6,800 on gold. I've since raised my target again back in early June, so that gold now is 7,000 and silver is 200. Not huge increases, but I felt there was room for more. Obviously, there's one guy out there in particular who's been calling much higher numbers on silver. And I said, I can't rule it out, but I can't get there on my work, so I'm not going higher than 200. But, really, I raised in early June, so since then, we've gone the other way. And my calls aren't based on short term anyway, so that didn't bother me. But I thought, okay, we're going down, and maybe we'll hold 70, and that didn't hold 70, so maybe we're going back to the retest the lows. And today scares people because it broke that. But I'm sticking to my guns that I think we're very close to a big reversal here. And I think we will see those numbers. I'm not changing or feel any kind of desire in any way to change those numbers and lower my numbers or reverse myself. I'm still very bullish on both gold and silver. And in fact, copper, which isn't a precious metal, but I re-looked at copper this morning and it looks great. I mean, I have an $8 number for copper. And the copper producers, I've, COPX, the ETF for the copper producers, I have a 140 target on that, and it's somewhere around 75, 76. That's a pretty big jump. I think, I'm very comfortable with that number. So the metals look great here, in my opinion. You just have to kind of get through this kind of uncomfortable period.
Yeah.
And I think people jump back on the bandwagon. What we typically see at these bottoms is you get reversal, then you get some short covering that kind of boosts it. And a lot of the people that bailed out are nervous and think this is just a dead cat bounce. So they don't get back in for a while. And then they help fuel it later on. So we'll see, but that's where I stand. I think you could see 20,000 on gold. And I've raised my long-term expectation on silver to maybe 1,000. So, still big moves in those, even though they'll correct during the bust. They will come out the other side with much higher highs.
Well, I stand by the case that gold and silver will bounce back further for all the same fundamental reasons. I could go to the whole debt situation, the currency debasement that goes on. I mean, it's just incredible. It's not getting any better when I see what's going to happen to the U.S. coming out of this Iran war with the $300 million claim and the return of this billion and the return of the $100 billion and all the costs of the war, which was fruitless. I mean, the whole thing was, in my mind, fruitless, accomplished nothing. In fact, it was bad. It was bad from a USA perspective. And unfortunately, from a USA perspective, they just keep losing allies more and more and more. And when you lose an ally, he doesn't want to own your currency. Okay. So I think we'll be right back to that dollar weakness, gold strength, silver strength. The fundamentals will support the silver story. And there's hardly a day goes by when you don't read something going on in the electronics kind of business that isn't so powerfully great for silver, whether it's the solid state engines, the AI plants are putting up, and it just goes on and on and on. And I think we underestimate what really could happen. And one of the things I do fall back on is the knowledge that when silver and gold were currencies, silver traded a 15-to-1 ratio to gold. When gold was at 4,500, silver should have been 300, but it's been suppressed for all these 50 odd years by banks who've been short the whole time. I mean, it's shocking to think that we had that. As you know, I don't have a love on for banks, and I maybe I could get mad at myself for playing in a game where it's manipulated.
Right.
You probably feel a little bit stupid because of it, right? And even this time I'm thinking, no, there's no way they can knock it down that far. That's impossible. The impossible happened in 30 hours. President Trump was going to audit Fort Knox, but for some reason he's never got around to it.
Yeah.
Not that he doesn't change his mind that often, but Fort Knox is not that far away. Just go down there and check it out, man. Tell me what you got.
You are the president after.
You might revalue it and you don't have any.
Yeah.
It would be kind of an odd thing to do.
It would be kind of awkward.
You pretend you have it. Well, I've heard those things. And of course, something that's added a little bit of color to that is the fact that the U.S. Mint is bringing out their celebration coin on July 4th. And the gold coin, which is in the shape of the Liberty Bell, it's 1 ounce of gold, but they're charging $19,000 for it.
Right.
And what are they charging for the silver coin? Like $750?
Yeah, it's like a 13-to-1 ratio.
$750.
Yeah.
I don't know. Maybe they got the memo about the reset, being a government agency. I don't know. Makes you think.
Market corrections rarely move in a straight line, especially after parabolic advances. Precious metals have experienced significant volatility, but the underlying thesis supporting higher prices has changed very little. Expectations remain centered on a strong recovery fueled by economic pressures that continue to build beneath the surface. Dollar weakness, persistent inflation concerns, and expanding fiscal deficits remain supportive for gold and silver prices. Many investors focus on short-term price movements, yet major bull markets often require periods of consolidation before advancing further. A reversal could be strengthened by short covering and renewed investor demand as confidence returns to the sector. Copper is also attracting attention, with expectations for substantial gains driven by industrial demand and infrastructure growth. The broader commodity complex appears positioned to benefit if global liquidity conditions become more supportive and economic challenges intensify. Now, let's get back to the interview.
We have our part of the world, particularly the developed part of the world, is not doing well. And the people who buy gold and silver, they're not on our team anyway, those guys. The guys that buy it are China, India, Asia, and they're not. We saw gold imports into China. I think there were 164 tons in May. 164. That's 2,000 tons annualized. We only have 4,000 tons. We mine 3, and I think we have a total of 4,000, including recycling. Well, there's the half of it gone if China keeps that up. Okay. And I can take up probably another 400 or 500 that China produces themselves. that they don't export. And then throw in the Indian demand. My God, I don't know. There's going to be shortages of these products. Well, there's never a shortage of gold because there's all the gold in the world still with us, right? But we don't have all the silver. We might only have 2% of the silver we've ever mined because most of it's in such small little places that you can't recover it. So I think that you wait till we're going to open up on Monday. What are the Chinese going to do? You know, they're bringing back these bank accounts where people can buy gold in the bank and get their money back traded into gold. That starts on July 1st. We've had some negative changes in India, and I think those could easily be reversed here.
Mm-hmm.
You know, there was a time when the Indians were buying so much silver that they had to stop them from buying them in the ETFs, and the same thing in China. Well, maybe they'll say, okay, fine, ETF, start buying it again. Let's bring that 2.5 billion people back on into the game and have them buying things. That'll change things fast. So I'm hopeful. And by the way, as you well know, it's quarter end.
Right.
And quarter end is when banks to dress things up a little. Okay. I've seen it so often. It drives me crazy. Hopefully we can get through this quarter and it'll be clear sailing after that. I mean, I watch for things like that because people talk about it, right? Judy Scheckman talks. Andy Scheckman talks about, you know, the fact they might issue some bond backed by gold at $20,000 an ounce, something like that. And they're not dumb people; they're smart people. So there's some possibility of that. And of course, let's look at the real issue. The issue is that the U.S. is in trouble and they're bankrupt. They've been bankrupt ever since I got into gold and silver.
Right.
I mean, they got 200 trillion of unfunded liabilities. 200 trillion. What's your share of that? Don't think about it.
Oh, God. Oh, it's been a bad enough day as it is.
Prices go down, but you had to pay off your part of the debt. You'd be in trouble. Well, maybe more people go into the physical silver market, but you don't see that on COMEX. Although we do see it on COMEX, like in gold in particular. Almost every day, somebody's taken $1 billion worth of gold out of COMEX. Every day this month, including, I think, on Tuesday, another $1 billion of gold is for delivery in the spot month. And the next month, the July month, it's getting bigger in open interest too. And they never get off this stuff. You watch the change in rotation from the front month, which is a delivery month, to the outer month. There's almost contract for contract just rolls into the next month. They never get off the short. They can't get off the short. Well, they can't get off the short if there's no players too.
Well, if inflation remains elevated, he probably would respond to that inflation and be slower to cut rates and slower to be more diligent about shrinking the balance sheet. If inflation, as I expect, trends down, I've said through this whole thing, most of the blip up in inflation has been caused by Iran and the Strait. Not just oil, but fertilizer, et cetera, that really the trend is going to resume the downtrend, I think, here pretty quickly, particularly with oil prices doing what they're doing. Keep in mind, it was only a week ago, or maybe 10 days, but probably a week ago, that all the oil analysts that were out there saying oil's going to go, you can open the Strait, but oil's going up, not down, because you got low inventories and they've got to restock, and we could go 125 or higher. And I'm sitting there going, no. But not to get off topic, but my bigger concern with Warsh, and it would have been true with Jay Powell as well, or anybody in that seat, is to some extent, it's human nature to fight the last war. And the last big war was 2008-9, and maybe 2020 to some extent, where they did zero interest rate policy and where they goosed the money supply in big ways. As I say over and over, balance sheet was $875 billion. Fed balance sheet was $875 billion. October of 2020, October of 2008. Yeah. And now we went up to $9 trillion after the pandemic, or during the pandemic, and we're now maybe six trillion, whatever. So of course he looks at that and says, my God, we're way beyond normalized. We've got to normalize the balance sheet. My concern more with him than even Powell is that is his focus, and that he will be very slow and reluctant, but even Powell would have been slow and reluctant to produce the kind of growth in QE that's going to be required if I'm right that we're going to be facing a global bust. So it's not that we won't see that money, but it's going to come grudgingly and reluctantly. And right now, there's nobody, and I'm not saying I see things that nobody else does, but there's nobody in the administration, there's nobody in the Fed, and there's virtually nobody else on the street. People use the term bust, but they aren't talking what I'm talking.
Yeah.
Nobody's seeing what I think is coming, which is, something bigger than 2008, 9. And if I could be wrong, but if that happens, it's inevitable. We're going to see massive money printing. We're going to see, rates go to zero again. But it won't be because a Fed chairman thinks that's a good idea. It will come very grudgingly. And because it will come so slow and delayed, it will make the bust bigger, or maybe be the reason why we have a bust instead of just a deep recession. Because they are. Powell said it during his whole reign, and Warsh, I'm sure, would say it if you asked. We're not going back there. We made a big mistake printing money at that, at the level. So it's in their mindset that we can't ever do that again. The problem is, if we get a global bust, that's the only thing you can use to prevent a total collapse. So it's inevitable we will get it if we get a bust. It's just the timing before we get to that.
The long-term case for precious metals continues to revolve around rising government debt, ongoing currency debasement, and declining confidence in fiat monetary systems. These forces have supported gold for decades, and many analysts believe they are becoming even more significant as deficits expand and geopolitical tensions remain elevated. Dollar weakness is viewed as a particularly important catalyst because global confidence in reserve currencies often influences capital flows into hard assets. As nations diversify their reserves and seek alternatives to traditional monetary systems, demand for gold and silver could continue to rise. Industrial demand adds another powerful layer to the silver story. Growth in artificial intelligence infrastructure, advanced electronics, energy systems, and emerging technologies is increasing demand for silver, even as supply growth remains constrained. Long-term projections remain exceptionally bullish. Near-term targets of $7,000 for gold and $200 to silver remain achievable within the current cycle. Beyond that, more ambitious scenarios suggest gold could eventually approach $20,000, while silver could move toward $1,000 if debt expansion, monetary instability, and currency erosion accelerate further. While volatility is expected along the way, the combination of strong fundamentals, growing industrial demand, and structural economic pressures continues to support a highly constructive outlook for gold and silver prices. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.